FutureSpeak, July 8th, 2015. All right, do we have a lot to talk about today? The markets have really been moving. We've had lots of news in the background, everybody keeping their eye on Greece and, of course, on China. Got to wonder which is the bigger piece of news out there. This Thursday is a deadline, another deadline, for Greece to come up with their next plan. You know, they've essentially voted down anything that, or at least the last offer that the Euro ministers have made, and now they're waiting for one more plan this Thursday. And then on Sunday, there's supposed to be an emergency meeting. They already have the no vote, right? So you got to wonder how Tsipras can bring anything to the table that's going to be in line with what the public has said that they wanted there. This is really appears that it has shaken the markets, but you got to really wonder if that's what's moving the markets. They have a bank holiday. They've extended it till Friday, and this 60 euros a day that they're allowed to take out of their ATMs. So the people there are, of course, really hurting. Greece has to make a big decision here soon, and that does, of course, when you look at the humanitarian side of it, it's big. Now, the really big news, and I think what's really got the market shaken up, though, is China. 30% decline in less than a month. I mean, we've seen these huge moves and huge declines just in the last week. And you have, essentially China, the government managing the economy. They own most of the businesses. They own all of the big banks. So they're in control of that. We're not really going to have any big kind of banking crisis out of China, so you got to wonder if it's being overdone. But they've been pouring in money, and the truth is that you have to really look at when you have supported with the economy with condos that nobody lives in and malls that no stores are in and nobody shops in. Eventually, you run out of things to build that nobody wants and nobody uses, and then you get into a very different environment. Growth in China down below 7% for sure, maybe a lot lower than that with this big contraction. A lot of retail investors in China in the markets, and they're going to feel it, and the economy is going to slow down. News came out, that the brokers, some big brokers, were going to step in and buy that market. Well, that didn't really stabilize the market, nor anything that the Chinese government has said. And this reminds me like 1929. Remember the big crash? And all of a sudden, J.P. Morgan came in and he said he's buying everything. And that stabilized the markets for a while. But then the market started to move down again. So this is a crash in China. It is affecting the markets. And we're seeing our markets, our stock markets, the commodity markets really moving in a big way. And that's we're going to see the significance of that as we look at the charts here for the week. Well, U.S. stocks, they turned very, very volatile. There was a 350-point down day back a couple of weeks ago, and that was after I said I thought the S&P 500 could make a last move up to 2157. Well, that didn't happen, and that 350-point down day, which I talked about that next week, was a tell. And that tell told us that the bigger picture, the bigger patterns had rolled over. And so we're seeing that weakness come into the market, and I'm going to show you why there's more to come. Oil, well, 12% plunge in a couple of days, big downside move. We were in this synchronicity of patterns where the risk for that was there. We talked about that for weeks and weeks and weeks, that we were getting into a place where there would be a bottoming. Well, when we're near a bottoming, that means that you're also susceptible to big declines, and we saw that happen also. Dollar, well, that became a safe haven, so we had lots of buying coming into the dollar. That hasn't changed the longer term scenario. Bonds also a safe haven. That longer term scenario has not changed either. So we've had lots of movement in the bond market as safe haven money moved in there, even into the Japanese yen. And gold, been cautious about that here for a number of weeks, even though long term I'm so bullish. And that just shows you, and I'll talk about this later, that the deflationary scenario that's out there, and yes, China is a deflationary scenario, Greece is a deflationary scenario, that's just a myth that gold does better in down markets and deflationary scenarios. Truth is, when investors move to money, move to cash, it affects all commodities. We've seen that, except for, of course, the grains, which made a very, very good bottom a couple of weeks ago, and those overall have remained pretty strong. So we have a lot to look at in here, and we're going to get right to it. Noticing, and I checked with TOS, that the platform is reacting slowly. They have some glitch that they are about to fix, so the charts might change and load up here a little slowly, but we're not going to let that bother us as we move back and forth between charts. So we're going to start out right now by looking, as we always do, at the energies. Again, we talked about the synchronicity of lows in light crude, gasoline, and heating oil, and that's a time period when you can get some sharp declines. Well, that we did get, and now we have gotten down to some important support. And the patterns are suggesting that, well, pretty soon we're going to likely to get the bottom actually come in oil. We can't say we have it until the market proves to us that the bottom is here. So we're going to start out by looking at the light crude weekly chart, and we will see that the synchronicity of lows in this chart is telling us that this was a time that it was susceptible. I've had this synchronicity of lows brings downside risk message here for a number of weeks, and certainly that has come. There's big support here, and now I'm working hard to get all the support and resistances put in, because my charts will be a product that is going to be in the Slim membership, so you'll be able to get all these charts on your TOS platform with the support, resistance, and for many of the important stocks and commodities, we'll have the cyclical projections in there also. So lots of stuff that I think you're going to really enjoy for those of you that subscribe to the charts. So here's the important support right down there that it got down to, and that is certainly an important area. We're going to see that show up also as we look at it on the daily chart. So here you can see right in that area there where it came down very close to it. This is the synchronicity of cycles in here coming on the downside, and that brought all of this risk. So that is the light crude chart. Take a look here at the daily chart. Now the daily chart is a little bit unusual in that it's extended to a fourth cycle in this pattern. So this big blue one here that we're looking at and I'm highlighting, most of those have had 3 cycles in them. This one looks like it's got a fourth going in there, and that happens often where it extends out on the downside. And you can see the way I have the cycle drawn in is that a bottom is due and it's likely to get a rally. So what makes an important bottom? It's when you get a rally and then a sell-off and you don't get to a new low. Well, that shows you the kind of basing that has to happen in order to, and a lot of time that has to go by before you really get into a bullish period. So right now we look like we're in a period where the market can bounce, and you see the support. Here's the bottom of that support zone. We'll call it around 50.25, and it got very close to there 2 days ago, and now it's trading down to 51.24 at this time. So that's an important area. If it gets down through there, well, the next support isn't down till under 47. I hope there's not such a panic that it gets down to that level, but it certainly can. So that's light crude on a daily, light crude here on a weekly, and now we're going to switch over to the gasoline chart /RB, and you'll see on the weekly chart this has followed the pattern here that we suggested, got up to the fib confluence, rolled over, got down into this period of correction. Now it's got this little doji or hammer bottom here forming. Take a bigger look here, and you can see I drew in last week what the cycle projection, what it looks like based on how it's trading. That's this right in here, and it says when this correction's over with, you get into this rally. So that's also very supportive of the fact that we should be making a low here soon. Again, you don't buy these things until they have confirmed, and you've got a better bounce off of the low here in gasoline than you do in the light crude market, and here you could see the test of that 89-day moving average, slim ribbon turning negative and still negative in here as far as momentum goes. So it's got some work to do also, and we'll wait for a little better buy signal in the gasoline market before we're going to be buying in there. Now you can see here the heating oil pattern. This one moved down deeper, but still, come on up there, heating oil, but still moving down into this cyclical low period. Now it's given up a lot of ground, good support right where it came down to this week. And I would expect that it would start to move up in this rising phase pretty soon. Again, no buy signal in there yet, nothing that's telling us that there's anything significant on the upside. Let's take a look here at natural gas. Natural gas gave up a good amount of ground also, but I would not call it a devastating pattern. As a matter of fact, here you can look in this pattern. It's still in this green zone. It's, fooling around in here as everything gets sold off. But, I've said that there's a potential for a sharp rise in here, and that's after we get past this cyclical period. Talked about this last week. It was likely to keep moving sideways in here, chopping around. This extends out, we'll call it another 4 to 7 days before you get past this period. And after that, that's when I think that natural gas is going to have a rally in it of some significance. So we're looking for a bottoming in this period here. We'll call it the next 4 to 7 days. And then after that, turning up on natural gas. So still not a bad pattern in here, just a little more time before we start to see maybe a better buying opportunity there in natural gas. So now we're going to switch over to foreign exchange, FX, and look at these currencies we've had. Well, the dollar index moving fairly significantly as the markets have really moved money out of the euro. And you would have thought that the euro would have done worse than it did, but there was just a day of panic in there, and it didn't do all that bad. So the dollar index has had a rally. It's not a rally that has changed any of the scenario that I think has still been negative in the dollar, and we're going to see that here as the dollar is in this downward channel, and as I have marked off in here, this is the highest probability of the pattern in here. The fact that it has rolled over and established this downward channel has that be the case. It would need to trade or up above around the 100 area or pretty close to that to have me worried about this pattern not being still negative. And with what we're going to look at here in the euro currency, it really has me believing that this pattern is actually in the dollar quite negative, because the euro, once it gets past this period of figuring out this situation with the Greece, it's likely to get into a rally period. You can see this big declining period here, and then this basing pattern that has been forming. So we're in this corrective period now, and then after that we get into a rising period. Now there's no saying that it's going to get well above here. This is kind of a 115 area, but the probability of it testing that area is really high based on this pattern. So I think no matter what the answer is to Greece, we're going to get into a rally in here, and that's going to coincide with the resumption of that move down in the dollar. So I still think the dollar's got a lot of problems. Now when I look at this pattern here in the euro, it looks to me, based on the pattern, that there is still quite a bit of time in here, we'll call it a week or more, where there still might be some chop and risk in here. But then after that, I think it ends and it starts to move to the upside. Now, it's possible this extended a little bit further, but I doubt it. I actually think that it's got another, we'll call it, again, about maybe 5 to 8 days in here of fooling around and chopping around. We're liable to see a lot of movement in here because of the Greece situation. And that will give a lot of trading opportunity. But again, I think the trade in here is the long side. And this support area, 109 down to 108.20-ish, that's an important support number. And maybe it gets down there sometime in the next week. But then I think it's strong, and I think it's going to move back to the upside. So when you look at this pattern in here, this yellow zone, that's to me ending pretty soon on that weekly chart. British pound is the next thing we're going to look at here as we look at FX and currencies. And if you want to look at the ETFs in here, I have all the ETFs listed. Let's move this over so you can see right here where ETF in here is FXB. FX is how they all start. And also I have a watch list which you'll be able to get right on my homepage in the new site that has the watch list that associates all of the different ETFs with their commodities, all the commodities. So you'll want to get that if you don't have it up on your TOS platform right now. Here's the move in the British pound. And this, you can see also, like the euro currency, looks like it's getting ready to get into this final stage of this decline and then be moving up. So there's a lot of correlation between the British pound and the euro currency. And based on what you see here and the potential low coming, these two blue spikes are the timing spikes that tells you where the low is likely to come. That's the next 1 to 3 weeks. Then after that, moving on the upside, and that likely coincides with the move up in the euro and the move down in the dollar. So all of that is lining up for some pretty good trades here in FX. We're going to look here at the Japanese yen. Last week I put another cycle pattern in there because it looked like that was the one that was becoming dominant, and so now I have only that one in there and show a little revision as these cycles now appear to be a little bit bigger than they were before. And now you can see the perfect alignment in here of the patterns, and what it looks like now is that, well, the Japanese yen has become a flight to safety also. And truth is that in the last couple of months I've been talking about, before you know it, we're going to see a strong Japanese yen because, well, Abenomics, that's another joke. And you can't just keep printing money and expect that to not bring problems. And so they're going to have to stop that. And I think investors are starting to see that. So I think we're making a good bottom here in the Japanese yen. And right now we do have a little flight to safety in there. So that's moving pretty strongly on the upside. We'll switch over now to the Aussie /6A. And that currency and the Canadian dollar, very, very related to the resources. And of course, we've seen a lot of weakness here in resources. Gold and silver weakening, other resources weakening, steel stocks getting hammered. So this pattern in here, this is now turned negative. It's gotten underneath a key area right here where this cycle started right here. And that says to me that that has got some period of here of about 4 to 6 weeks where I think that the weakness will remain. You can see I have this drawn right in here, and that is probably what it looks like. So with several weeks still of weak market in here in the Aussie dollar. Take a look at the Canadian /CA /6C in the Canadian. And this one, similar look, but now it hasn't broken that low yet, like we saw in the Aussie. So that's the area there, but look where it points to. Like I said, another 4 to 6 weeks of time in here before this makes a bottom. So none of these currencies, the resource-based Aussie or the Canadian, look good at all. So that is FX. We've seen the dollar strong based on a flight to safety. We see a lot of reasons to believe that the euro and the British pound will be bottoming soon. And yes, that could still mean some declines in here. We need to see the market tell us that there's a bottom coming. But that's proof to me that the dollar weakness is going to be coming back when I see how those correlate together and how the patterns align. So now we're going to look in metals. The last couple of weeks I've been cautious as we have looked at the metals markets, saying that, well, gold and silver have, while I've been longer term bullish, have had patterns in here that have suggested that there was some downside coming, and we've seen weakness come in. Now today we're getting a bounce in these markets, but because they got down to an important level in the range. But overall, there is, I would consider this to be some important risk still when we look at this, and I'm going to show you the patterns as they are setting up right now. Here is the gold pattern, and you'll see a couple of out of sync, or we call out of phase patterns on the bottom. And this one highlighted here, this light purple one, is the one that really looks like it's dominant right now. And you know, like I said in the currencies just now, that the Aussie and the Canadian look like they had some 4 to 6 weeks to go. That aligns here with the gold market right there that says, you know, out into August looks like there's trouble in here. I don't like this pattern. I have not liked the pattern, and my longer term call in gold, I haven't let that really bias me, because these patterns have been, I've been cautious in there. I have a very, very small holdings in the gold market right now, and it's going to remain that way until I see us get into a better pattern. Bottom of the range right now that we've been looking at, and certainly threatening that level. And with all of this time to go, this 4 to 6 weeks, the odds are pretty good that we're going to break down in here and we're going to get another leg to the downside. I don't like that, and I certainly would hate to see this under 1130. Which would be really not a good longer term message either. So that is really a important chart to look at. And now when I look here at the daily, and I'm going to go out to, I'm going to go out to 2 year here on the daily chart, and you can see how these cycles align. This is the weekly cycle, the smaller one, showing up in here. And let's just take a closer look here. You'll see how these align here, and even a closer look. And here is this shorter term pattern. You can see the dotted lines in here, and these dotted lines really suggest that there's another, we'll call it a week or so on the very, very short term pattern. We broke through these supports. This is the big support, or the first big support, at 1141, and then it's at 1131. So it got down there and bounced, but I think we're going to see more downside here in gold over the next week. This is not a good pattern whatsoever. We're breaking through this support area, and we're going to look for more downside in the gold market. Let's move this back to the weekly, take a little brain picture of that one, and now we'll switch over to the silver market. The silver market, a similar pattern in there, and you can see here this actually had a breakdown. We had this support confluence coming across right here, and silver broke down under it. It actually got driven down with platinum and copper, all of those really reflecting deflationary scenarios that we've seen in here. So silver, this is not a good pattern, and it also has, we'll call it 4 to 6 weeks more in here before this bottom comes. So this is not a good pattern when we look at that, with the pattern in gold not having broken down, the pattern in silver having broken down. Here's the daily pattern, and this is that week where there is a lot of weakness. We're getting a bounce today, but it's unlikely that we're going to get a bounce that holds here for a while. So I think today's bounce is a fake, and I think we're likely to see markets move again to the downside in these next few days. So silver not looking good at all when we look at that. Copper, we're going to switch over to /H. I'm sorry, we're going to look at platinum first. Don't want to jump past that one. There's the weekly in silver, which had the breakdown. Platinum has been in a negative pattern already for a long period of time. It's extending down past this period where the lows were expected. That is not good at all when you see that. So we're just going to look for places where there are bounces in platinum, but I don't think any of them are going to hold. This is not a pretty pattern here either in platinum. And when we look at copper, copper got devastated. I've had some viewers out there that have challenged my bullish view in copper, saying that, well, these patterns are not good. I saw it in a period of correction, but I thought it was going to hold up in the area of supports. It did not do that at all. Here was the last vestige of support right over here where I thought it would turn up from, and tried to turn up there in the copper market, but that didn't turn up. As a matter of fact, it failed. And now you see this low way down over here that broke underneath this low. That says that this next rally, when it comes, is going to be deficient It'll stop at some resistance up in this area and likely roll over again. Getting underneath this level is not good at all. You can see that's now turned into a red red area right there as we're in that phase. That should be a bottoming phase. Still, bottoming phases have a lot of risk, as we've seen. And here you could see the shorter term pattern that says it's got another, we'll call it another 8 to 10 days before this bottom is really in place in copper. So copper not looking good to me at all. So that is a look at the metals, and the messages there are not good. And we're going to look for more periods of weakness out here in all of these markets. Of course, this is Future Speak. Do this every single Wednesday. I've done a version of this for the last 3.5 years. This is a member video. It will be in the member level 2, and that level 2 has all of my videos in it that you'll want to see. There's 6 different videos. Future Speak will be one that is every single week, and then quite a number of other ones that'll be rotated in there throughout the weeks. So lots of stuff that we're going to have in that membership level. We are happy that the week of July 20th, not sure the day will open in July 20th, but in that week, but somewhere in there is when membership will open, and you'll all be able to sign up. There'll be one more Future Speak that'll be public facing, and that'll be a week from today, next week, on the 15th, and then the following one, the 22nd, will be in the member part of the site. So then hopefully you'll all be in there and joining the membership. It's not expensive at all, and joining will be able to support me bringing all of this content for a long time to come. So please do become a member at some level, and if you like the slim charts, jump up to that level, because that includes, of course, everything else underneath it. So please do consider becoming a member of the new Ask Slim site. All right, so now we're going to look at the Treasury market. We're going to look at the 10-year and at the 30-year. We've had a very, very good bounce in here, but those bounces have come up right to some resistance areas, and now we're looking like even though the stock market has still been weak and choppy, that the bond market looks like it is starting to stabilize from its big rally, and I think actually getting ready to roll over. So we're going to put up /ZN on the weekly chart to start here. Get that chart loaded up for you, and then switch over to the charts, and there you go. And here you can see /ZN. Now I'm going to take this out to a 10-year chart, because you'll have the proper alignment of these big cycles in here. For those of you on TOS, if you put long cycles in on the longer charts, when you go into a shorter chart, they're not going to line up right. It's a glitch in the system. So here you can see now I have the proper alignment on those cyclical patterns. This is extraordinarily bearish. You could see that big red line right there. Now I want you to see here, we got this rally right here. That rally was due, we talked about it, and that's this cycle pattern right in here. Perfect. Nice rally. Look at it, comes right up here to the 34-week moving average and then stops cold. We're going to get into the period here, and that may be after this stock market decline ends. So there could be several more weeks in here where this keeps moving around, chopping around on the upside. Then we'll get into the period where all three of these patterns align on the downside. There will be a big decline most likely, and you will see another move down in here, likely to new lows in the 10 years, new highs in yields. But that's once we get past this panicky period now that we are seeing in the markets. So that is the 10-year, and we're in a rally period that, well, should have come. Let's take a look here at the chart in the look a little closer in here. You can see that big head and shoulders top that formed in there. Now, if you look at the right shoulder here, you can see there was a head and shoulders in the right shoulder. Beautiful pattern. The measurement was down to here. We made that measurement, And then we had this decline. You see that cycle right there? We then went into a rally, and that rally is due to roll over and come down. That's right in here. So I'm going to get a closer look so that you can see this. Now, if you measure from this high all the way up over here where we had the top of the head there, down to this low, you can put in the Fibonacci's. Now, we'll have these all in there for you for traders that are going to use our charts. And there you could see that 618. Now, that coincides with that weekly 34 week that I showed you on the previous chart. Perfect spot for that to get resistance. The last 2 days it did so. So here's this cycle pattern in here on the short term. Two of them pushing down right here, likely to get a decline in here. That probably means a bounce in the stock market. And then very, very likely to get another rally. That probably means another sell-off in the stock market. That's this pattern right in here. So we're going to look for some pullback over the next few days. Probably some rally in the stock market over the next few days. And then get another lift in the bond market. All of this going on in that big downtrend we're looking at. So it's so important to look at the different time phases to get a good sense for the market, and that's what I'm getting in here. That we're in a rally that exists in a big decline. Now here you can see this green zone in here. That green zone I'm pointing at is support. So that's, we'll call it on the 10-year, excuse me, 126.12 down to about 126.07. Then there's another one down around 126 even. Those supports are likely where we're going to get to in the next few days, giving some calm in the equity markets. Those are going to be for very short-term traders buy areas if that does set up that way. So good test of the resistance, good pulling back, and it looks to me like we're going to see some more wide chop in there between that low 126 area and the mid 127 area over these coming weeks. Now, when we switch over to the 30-year, we're going to see a slightly different picture, but not all that different. There's that head and shoulders and the measurement over there. Here's the shorter term pattern and the intermediate fibs. Let's even get a closer look here. And you could see actually this only got to the 32%. So you can see that the 30-year was actually weaker than the 10-year. And here's that same pattern we're looking at, and that is pulling down to this support. We'll call it 151.5 area down to 150.26. That's where the supports are if we get this correction that I'm expecting and bounce in the stock market. And then this goes up and the stock market goes down again. That's how it's aligned, and that I think has been just a very, very good pattern and a nice consistent pattern. So what we're seeing in here in the bond market is a lot of wide chop, a lot of flight to safety, a period where we can do some buying in this next dip. However, long-term trend still very, very negative. That's not likely to change for a long period of time. And once we get past this period of weakness in the world equity markets, the bond market will be getting hammered again. So that is a look at the bond market. Now we're going to switch over to the stock market. We have had a big, big decline in here. These patterns are aligning more clearly than they were before. We saw a massive amount of chop going on for months and months and months as the top was being built in the stock market. We saw it coming up into this big confluence of resistance areas, and we'll switch over here to the S&P 500 so that you can see that. Now that's actually a big look at 10 years. So let's just look here at this period right in here. This is the daily chart. I'm going to come back to that. I actually want to look at the weekly chart first, and we'll look at this period right in here. This is this big, big topping period that we've had in here, this big confluence of resistance. I thought there was going to be, while they were holding in here, I thought there was going to be one more move to 2057 up to that next resistance number. They did not do that. The tell was that big down day. I'll show you in a moment. Now here you can see this 15-week period right in here, this 14-week period right here, and only 9. That shows you that there is a lot of concern here for the stock market over the next, we'll call it reasonably 5 to 7 weeks. and that says to me that, well, any rally that we see in here is likely to get sold off. We'll take a look now at that daily chart, and that chart to me looks to me like it's trying to get a little bottom and bounce in here, and you can see the patterns as I have them drawn in here. This area up here, 2092, 2084, that is a resistance area. Were we to get a big bounce in the stock market, that's where it would go to. There's a little bit of confusion when I look at that. The question is, was this already the bounce right in here, and then we're already moving down? I cannot buy a market when it's got this kind of look to it. Either it's the bounce is in place and we've resumed to the downside, but the bond market is telling me that the bond market's going to correct. So I'm trying to use those short-term correlations, which says to me likely to get one more try up here in the stock market and then roll over again. Any way you look at this pattern, it's a horrible pattern. This 350-point down day right in here was the tell. As it broke underneath this level right here, you could see the big head and shoulders that formed after on that breakdown, and that was it. That said that this big pattern that was pushing up has now rolled over, and all of these cycles should continue to stair step on the way down. And based on what we're seeing on the weekly chart, again, we're going to say some 5, 6, 7 weeks more of this upward up and down chop that we're seeing in here. So that is not a good pattern at all when we look at that. Let's take a look, go back to the weekly pattern in the NASDAQ. So there's the S&P 500. We're going to go NDX, put that up, and we're going to see a very, very similar pattern. Actually had a little warning in there earlier in the NASDAQ because that pattern really looked unfinished to me. And now you can see in here that, well, again, we have several more weeks in here, 4 to 6 probably here, of downside when we're looking there at the NASDAQ. Also, we want to look at the RUT. If you're not sure about how clear these counts are and there's any challenge at all to it, for those of you that are cycle traders, you can see right here in the Russell, let me get this moved in here, has a very, very clear pattern in here where it has had this rally right in here and the rollover. This is 9 weeks, and this looks like the correction down to the 50% fib, 10% level. And here, again, that's looking like 4 to 6 weeks more of downside based on these continual patterns. Look at these beautiful cycle patterns right in here as I finish the envelopes, and that's where we are right now in this declining phase. That all says some pretty negative things here when we look at those. Now I'm going to move in the S-Slim market condition indicator because this is important. I want you to see in here as I move this in that we have the 4 indexes. I have the ETFs in here, and we now have 1, the spiders, 2, the NASDAQ, 3, the Russell, and 4, the Dow, which was the weakest, all dark red, all near the -100 levels. That says that the internals of the market have turned significantly negative, and that longer term trend that has been holding the market up for all of these months, that it has dissipated because these could not get down that far based on how the formula is built in here if the long-term pattern was still strong. So I wanted you to see that look and this look here in the Russell. They all point to lower prices out there. We're going to get rallies, but I think those rallies are going to fail. Let's take a look at the VIX VIX, the volatility index, CBOE volatility index. Now I'm here on the daily still, so let's move over to the weekly. And we talked about these areas of upside spikes. When we got into here, I said that's the area that there was going to be a lot of risk of upside spike. There it came. We're still in that rising area right here. Now, 6 weeks up to the high, there are very few of these have been able to get up past that 6th week. So I'm thinking that, the volatility may have seen its peak for this particular period, though we're in a pretty panicky area in the stock market. So maybe one more time above those levels, but then we'll get some volatility settling down. Here you'll see the short-term pattern in here, and look at these beautiful cycles as they're drawn in here. This is, remember I just said I think the stock market's going to rally and the bond market's going to pull down. Well, this is also saying the same thing. We're looking in here for decline in volatility in the VIX over the next, we'll call it 4 or 5 days. And then another big up move in there as we get into this pattern. That's how these cycles align in here. And it says that this next week could see the stock market trying to settle down, the equity markets around the world. But then after that, there is going to be a lot more risk in the stock market after just the next few days. So the VIX is telling us the same story that we're seeing in both the bond market and the stock market. Bond market pulling down a little bit as the stock market settles, tries to get a bounce, and the VIX then has a little bit of a pullback. But that all looks to me like 4 to 6 days at the most, and then back into this situation of equities under a lot of pressure, bonds getting bought, implied volatilities moving up. That's how all of these correlations of the shorter term and the longer term cyclical patterns all work together. So I think that was a pretty good look. We've added grains to our FutureSpeak here. We're going to look quickly at the grain markets, and then we'll wrap this up. I know it goes long, and generally this is going to be and the Friday show, which is a free show, the Aslam Market Week, are going to be the longest segments that you're going to get from me. This one running normally 35 to 40 minutes, and then the one on Friday will be right around maybe close to an hour, 45 minutes to an hour, depending on length of interviews I may bring in later. So that's how it's all shaping up. The rest of the segments are all going to be in that 12 to 15 minute period as I look over tools for techs or look over trader psychology or stock sectors, IRA situations, or big pictures of the stock market. Lots of things that we're going to have there in level 2. So I think that you will enjoy what we're going to have. Okay, we're going to switch over again where you don't have to look at my face, but you can look at charts. There's that VIX index as we switch over and take a look at /ZC, the corn market. We nailed the bottom in here, really saw the bottoms forming nicely in these markets here. Here you could see we don't really need to be on 10 years when we look at these, so we'll change the style over to a 2-year weekly, which is where I normally am. And there you could see these two blue spikes pointed to this low, and look at that huge move here. I have a client friend who's a farmer who's been talking to me and telling me that situation in Canada is that they're super dry. Situation in the United States is that they're super wet and getting too much rain. That's been lifting in here. Now corn getting above this area of 415 has set this into a long-term bullish trend. So we're going to look for pullbacks in here, but generally I think you can look for places to buy the market. I think it's still going to be okay for a while. The wheat market here, we'll take a look at that as that nailed the bottom also. Come on up here, wheat, and that's where the lows were due when you had this huge spike on the upside here in wheat. Have had a little bit of a pullback. I'm going to look at the weekly and the daily on soybeans. The reason I want to do that is because the pullback in soybeans has been down to a pretty good buy area. So there's where the low was due, and look at that, how it nailed it. Moved to the upside. You could see this weekly downside bar right there. And here we will put this up, and you could see this pullback right here down into the slim ribbon. The slim ribbon did turn positive right over here, brought that big rally. Those of you that don't like the slim ribbon, you can use the MOBO breakout bands. They give you pretty similar signals. And right down here to the bottom of the support, right here at the 21-day moving average. And this, to me, this zone is a buy area. We'll look for another move up here in the soybean market. Last one we're going to look at is the oat market /ZO. And you can see my computer just froze there. Come on up, and this has been also a well-timed bottom and a nice rally in here, but notice the 34-week moving average as it has provided some resistance here, as it provided resistance here, as it provided resistance here, and then maybe some support right there. So 34-week moving average, pretty important here in the oat market, and we're there right now. So that is a look at the grain markets. So that's it. We're going to wrap up here. Did a lot, and it's kind of a long session because I did want to talk about some of the other background news that was affecting the markets, and that was, I thought, important information and supportive to what has been affecting these wide swings that we've seen in the market just in these last couple weeks. I think we're going to see a lot more of that. So that's Future Speak for today. Thanks for watching.